Good morning. Myself and Theo are here to talk to you about our annual results. Just finished what has been a very good year for the cooperative. It's extraordinary if you think back over the last 12 months where we started this year at $4.15 milk price to end up where we are today. And of course, even with this significant lift in milk prices, we've been able to achieve a very, very good business performance. So Theo and I will now take you through that. How do you think the year's gone, Theo?
I think you touched on the key points, John. 57% increase in milk prices is a long time ago that it went up in a year like that. And if we stuck to our promise of 40 cents of dividend, return on capital stays in the bracket where we want to be, 11 to 13%, which is world class. So yeah, not easy, but a good year.
So let's just go through into more detail. This year we've been able to announce a final milk price of $6.12 and a final dividend of 40 cents. So for a 100% shared up farmer, that's a payout of $6.52. So a significant move up, and I think about our third largest ever milk price payout combination.
That's right.
So if you think that in the history, and if you think that about the challenges of the last couple of years, it's a very, very good result for our farmers. So Theo, just go through where you see that milk price from a global competitive position.
Of course, we have seen significant uplift of prices. I mean, the fat prices have gone up over 100%. The most recent GDT event, again, strengthening of prices and whole milk powder. So that's a really good sign, and it's strong for milk price going forward. I think last year was the biggest challenge with such an uplift. We had 180 million stream returns against us. The margins on food service dropped from 27% to 22%. So these are quite big impacts, and I think we managed through that. So the uplift of last year was significant. I think we will see a strengthening milk price till Christmas. After that, with these price signals, farmers around the world will turn on production, and we will get more volume. So prices could soften a bit after Christmas, but that's all speculation, John.
Very good to see now that the payout that our farmers are receiving puts them alongside all of their peers globally. In fact, remarkably again, we're at the bottom of the South Pacific, and we're able to compete with US and European farmers paid about the same or more in many cases. Yep. We're not alongside a clear domestic market. So look, to the management team, it's certainly been a good year.
Yeah, and I think when you look at the chart, which we normally look at over a longer time horizon, that our farmers were paid half of what the Europeans and the American farmers were paid, all supported, of course, in Europe and the US. But now we are kind of on the same level. Of course, we go up first and go down first, so there's a timing element. But if you take the weighted average price, then we're on the same level, which is very good.
So that's total payout and milk price. So take us through, Theo, what you've seen in the business performance for the year.
So John, on the business performance, less milk, and especially less milk at home. We've seen the season. Better revenue line on the back of better prices around the world. Not on this chart, but operating expenses down again by 8%. So really, every year for the last 5-6 years, we've brought the operating expenses down in New Zealand dollar terms, so I'm very proud of that. Return on capital at 11.1%, that's in the bracket of world class of 11 to 13%, so very strong. And a good net profit, so that results in 40 cents of dividend, 6.7% yield on share. And when you look at the segments, ingredients, of course, pressure, but still almost a 1 billion EBIT, 10% return on capital, still a strong performance because we had 180 million stream returns against us. Strong milk price resulting into high input cost. So really, really an uphill battle, if you like, but still strong results. Consumer food service, very, very strong in my opinion. They shifted 576 million litres of milk again to a much higher value, and you can see the value here, 47% return on capital. Yeah, that's a strong returning business, and yeah, that part is so crucial in our strategy, so we are delivering on that.
So we started the season with less inventory. We also had that terrible spring on farm, so less milk production there. Then, of course, we had a very good autumn, and it meant that we had to sell milk production late. So that was the main reason that impacted the volumes through the year. But again, finished the season at record low inventory levels again, which is helpful.
So, John, what you can see on the wheel, we have actually added a segment. So you see advanced ingredients, and advanced ingredient is really a business, is value-add ingredients in what we used to say in the past, that runs at a return on capital over 20%. You can see that it is quite a big number. It's 19% of total milk. It's about 5 billion litres of milk. It's equal to our GDT segment. So we, of course, give priority of our milk to the highest returning businesses. So consumer, of course, food service, star performer. You see 27% uplift again this year. And advanced ingredients has been grown by 9%. So where the pressure is really on those base ingredients. That's why there's an arrow down and we have it in amber color. We would have loved to have more product there because that would have driven our top line.
Yep. The business is our financial strength in protecting the cooperative, and we've always balancing between our total payout to our farmers. Of course, the milk price is the milk price, and then we have our profit and our earnings number, and keeping a strong balance sheet. So this year, $745 million profit, so earnings of 46 cents. Again, strong result given that we had that 57% increase in milk price underneath it. Importantly for the board and, of course, for the management team, we made a commitment to a target dividend for the year, and we have been able to stay on that target dividend. So we've paid the dividend of 40 cents out of that earnings of 46 cents. Because the balance sheet is strong, we're right at the top end of our policy, but importantly, stayed on target, delivered the 40-cent dividend, which we know, given the difficult year that was still on farm, recovery from the previous couple of years, it was important to get that cash through to farmers, as we have with working capital management right through the year, and we're in a very strong position to go forward with a gearing ratio consistent with last year, so within our target.
And I think, John, the drivers of that from the business, strong discipline on capital expenditure. Yeah, we really went to an 851 million capex, which was under the 900 million which we forecasted. So strong controls on that. And what you said, very strong management on working capital.
So we've got a business that is international, global business. Some markets that are challenged this year due to geopolitical events. Venezuela, for example, economy quite tight in Brazil. Good result across in Chile, though, in the Soprole business. China business generally has gone very well, although, of course, a couple of challenges in there. We just touched on China farms. The farming business itself going very well, and we do expect prices at the farm gate to come up. And, of course, you are shifting that milk now into consumer and food service within China. You'll see a lot more of that over the next couple of years. Yep. Also, of course, being mate, still a bit of a struggle for and a frustration for our management team, given the significant changes in regulation in China. What do you see playing out there?
Yeah, like what you touch upon, the regulation kicks in right now. So the whole registration of infant formula is happening right now. About 100 recipes have been registered. Of course, China had a massive amount of recipes. They want to really bring that back in order to have food safety and quality control around that business. That's really a scare for the government. So that has caused a lot of turbulence in that market. So a lot of price fighting, people trying to empty the pipeline. But I clearly see, John, that we go to a much more stable environment when it comes to infant nutrition. And in the total context of our Greater China strategy, I mean, we have a fantastic ingredient business. We have a strong food service business. We're building consumer positions in the whole new retail scene, which we see emerging in China. And a partnership, we have always spoken to Beijing and to the government. You know that partnership is important. Being Made is a strong partner and has a strong footprint. So for the future, it's still a very key investment for us. And yes, we went through turbulent times. We looked at the valuation. We did an impairment on the carrying value. That was needed to have prudent financial behavior, but it's still a key investment for us, a key part of the integrated China strategy.
And we see with regulations now coming through, of course, our own brands have been regulated now, received regulation approval, and of course being mates with the first group that got approval. So we would see and expect that that will change over the coming months. I think our last part of a key geography for us, which has been a little bit of a frustration over the last couple of years, particularly once we had the fire in Stanhope and we lost the plant in Australia. It was very pleasing to be over there about a month ago now and open that Stanhope plant. And of course, business performance in Australia very strong again, back on strategy.
Yeah, I think what you can see when you look at volume, value, and if you like, return on capital. I mean, we were a business of similar size, let's say 1.6 billion litres of milk. We transformed that business from a negative return on capital to a strong positive return on capital, from -6% to +12%. And now we're growing the business. So we have picked up a whole lot more milk. We're over 2 billion litres now. We're very confident that we can grow that base further and strengthen the Australian footprint. And let's be honest, John, we need a good balance as well from Australia, because our growth in New Zealand will slow down a bit, and to develop the milk pools where we're active around the world is good for us, and it's returning to farmers.
Very much so. It was very good being in Australia a month or so ago now, and how positive our farmers were towards seeing what we're doing and having that plant going, which was great.
Yeah.
So Theo, that pretty much covers off the year that's just gone, and take us through what your priorities are now for the year in front of us.
Yeah, so John, we always look at our 7 platforms on our strategy, and it's very important that we protect our market share in New Zealand, and that has gone very well last year. We have to drive value with our ingredient business, and we're doing that on the back of advanced ingredients. We are reporting that at the moment. It's massive value for our farmers. Food service is a star performer, so we keep on growing our food service business, of course. And one important one, and you know that I'm passionate about it, where we want to put a very clear footprint, is on that active living nutrition. So that's really around medical nutrition, that's pediatrics, sports nutrition. We have a lot of IP, we're very strong. Yeah, so we want to grow that business. And what I just touched upon is the milk pool strategy around the world. We have to be cautious, but we have to grow where we're strong and grow where we can grow. So those are the key priorities.
It's good. And so at the moment we have got we're holding our forecast for the year ahead. It's $6.75 per kilo of milk solids, milk price. And we've got an earnings range of 45 to 55 cents. We will update our view around dividend. We get much to the half year. Of course, we want to ensure that we keep the strong balance sheet within the cooperative. And of course, also, as always, focus on delivering cash for our farmers. Yep. I think the other comments I would make are that we see today a business that is significantly different to what it was even 3 or 4 years ago. Innovation in our organisation is critical. The way that we respond to demands of our customers and our consumers globally, and we're seeing a significant change in the way that we approach our business. So I'd like to commend Theo, you and your management team from our farmers' perspective. You know, we started the year after the back end of 2 very difficult years on farm. We've come through with significant rise in milk prices, and we've still delivered very strong earnings, and the cooperative is in a very strong shape. So we look forward to delivering stronger results in the year ahead of us. So thank you. And for our farmers, we've got a round of farmer meetings which are starting this evening. Please look at those schedules. All of your board and Theo's senior management team are going to be on the road for the balance of the week. So we look forward to seeing you at those meetings. Thank you.
Thank you.